And just to start with, we'll get to Medibank in just a moment. I know everyone's very keen to weigh in, but let's get your thoughts firstly on the market.
James, look, certainly seeing the market under pressure, as you mentioned, seeing a huge pullback across most of those sectors after that huge surge yesterday. So certainly was quite evident there was a bit of a dead cat bounce that we were talking about yesterday. I think initially the reaction to China's cut in interest rates yesterday was potentially overdone. It's in quite stark contrast to what we're seeing over in the US. We're continuing to see the Dow and the S&P reaching those record highs. On the other end of the spectrum, the Australian market really still coming under pressure, potentially as a result of those global growth concerns continuing to weigh and potentially falling commodity prices as well. We saw that materials sector coming under pressure once again, a pullback from the surge we saw yesterday where it was up about 3.3%. We saw those miners over in London coming under pressure, and as a result BHP and Rio were both down, but also Fortescue came under pressure today after seeing a huge surge yesterday where it was up about 11% or so. Having a look at those energy stocks, we also did see those stocks under pressure today. Again, a bit of a pullback after the surge we saw yesterday. Interesting to note, coming into the afternoon's trade, we did see that consumer discretionary sector turning around. Of course, we saw that weekly consumer confidence read up about 1.2%. And of course, over in the US, we did see some of those retailers gaining some momentum ahead of the black retail sales on Friday. So overall, a bit of a disappointing day. Those volumes were very strong today, coming in just below $6 billion, and of course the focus being on Medibank, and it was really helped by some strong volumes that went through in Medibank.
Medibank, after what has been just a fanfare and hype, the likes of which haven't seen in quite some time, it finally IPO did very well out of the blocks. In the end, closing higher, 7%, $2.14. So retail investors getting in at $2 did reasonably well.
James, they certainly did. As you said, coming on initially up about 11%, but closing slightly below that. It was quite interesting to note as well that obviously its nearest competitor, NIB, had a really strong performance today off the back of a strong debut. They closed up about 5.6% in the end. But as you say, I think really retail investors have benefited from this today. Certainly nice to see a profit on the first day of trade. I think there was generally an expectation we would see a strong debut, given the fact that obviously it was very heavily oversubscribed, and obviously a lot of demand coming out of Australia and from a lot of global investors as well. So that obviously set the company up quite well for a strong performance today. And of course volumes were expected to be fairly strong as well, given the small allocations going to a lot of those institutional investors. So I think overall certainly a positive day today, particularly given the fact that it does actually look fairly expensive. We know that it was priced at the top end of that indicative range, and obviously looking at how it does trade against some of its competitors, trading at a premium. So it's on around a 23 times earnings for FY15 in comparison to say NIB, which is on about 19 times earnings. So potentially why we did see a bit of a pullback today, and also a surge in that NIB share price, given the fact that it is trading at a bit of a premium. So I think in the short term, certainly the demand in the stock, I think will probably keep that price high. Maybe the fact that it has come on quite expensive at quite a high listing price, potentially some of those gains in the medium to long term may be a bit limited. So potentially some of that growth may be a little bit questionable, but overall certainly a really strong performance today, and really nice to see, particularly for those retail investors.